Hi everyone, Andy Pickering here. Welcome to the Crypto Conversation podcast here at BraveNewCoin. It's time for the weekly crypto market sentiment report. As always, best place to watch this is on the BraveNewCoin YouTube channel. Just going to run through the wonderful world of crypto Twitter, see what's going on. And of course, yeah, bit of a crash happening at the moment. So yeah, let's get on with the show and tease out the important narratives of the week. As always, we will start over here at a BraveNewCoin and the Bitcoin Liquid Index, the BLX, Bitcoin around 41,000 US at the moment. Ethereum Liquid Index, the ELX Ethereum around 2,700 at the moment. So we look at the Coin360 heat map. And yeah, just a nice sea of red. Nothing good happening in the market at the moment, really. Yeah, so Bitcoin, down to just over 40,000 and in danger of dropping below that key 40K price level at the moment. Why? Why is all this happening? Well, just before we find out why, let's have a look at the crypto fear and greed index. Switched back quite harshly to fear, as you would expect. Yeah, so no surprises there. All right, now why is all this happening? Of course, well, I guess one of the macro factors, of course, is the Evergrande, which is basically a massive property conglomerate, I think is probably how you would describe it in China, right? And so you can see this is just Google Trends going back, past 5 years. Not too much commentary on Evergrande until really the last week. I think this is the last week. Let's just make sure. Yeah, anyway. Yeah, pretty much all happened in the last week, probably last month or so, really, or last 2 weeks. So, and this is a kind of, so old mate, smart contractor on Twitter says, everyone is obviously an Evergrande expert now, but he points out that he didn't see a single post about it until it was already down 85% from its highs. Because this chart here goes back to, so you see the highs were around the start of 2018, late 2017, and then been on a fairly steep downward trajectory, which has just accelerated in the last 6 months or so. So that it's not like you could say there weren't signs of this happening, but I think perhaps that has been, more people have become aware of it. The market has started to price that in. And of course, this is not crypto at all. This is all markets are down. All markets have begun to price this in. And so, of course, that has just led to a risk off in the crypto markets. And here we are. Now, Alex Kruger says, odds are Evergrande will become a non-event in a matter of days. And the reason for this is not so much traders worrying about the reason for concern is not Evergrande itself and what could happen there, but traders are worrying about it and therefore pricing it in and taking trades accordingly. So, I mean, I think that's correct. But that is based on the idea that Evergrande doesn't turn out to be an implosion and have repercussions on all markets, and which could turn into some kind of existential global financial crisis. I mean, that's worst case scenario. I don't think that's likely, but that is worst case scenario. Best case scenario, as Alex says here, it's just another blip in the market and we move forward. All right. So Evergrande aside, which you could argue is just a macro catalyst for the current price correction, but Dave the Wave prominent technical analyst on crypto Twitter and a fellow New Zealander, a fellow Kiwi. Dave, if you've been following his charts, has been calling for this correction for some time now. And I think it's just worth having a look at what Dave is saying. So he's basically saying here, if the correction is as long as the parabolic run up, that would put the accumulation of that correction out to the end of this year, and then all systems go. So sometimes people, I think, wrongly characterize Dave as a bear. I think Dave would say, no, he's just an objective analyst, but he's bearish when the charts are bearish. And Dave has quite correctly pointed out bearish momentum in the charts. Sometimes it's as simple as that. My point is, when he says all systems go, he's quite bullish for next year. I think he sees Bitcoin finally reaching that 100K target next year. But at the moment, yeah, so he's seeing the correction would go down to the end of the year. Here's another one of Dave's charts on the daily hodl. So yeah, Dave here says that the price action on Bitcoin looks quite similar to 2014, which is back here. So if it follows the same path down, then yeah, well, this will play out, yeah, as Dave says, roughly to the end of the year, and will bring price back to, somewhere. It may not reach down to 20 grand, but that's around where this is the buy zone, right? So if price did ever get right back down there, man, you think that would be a good buy. But as it all often happens with corrections as well, they never go quite as steep as the bears want them to, and you don't always get those entries that you'd really like. Again, another chart from Dave. Medium-term outlook, same thing. Might not be the prettiest picture, but at least it would have the correction complete towards the end of this year. And it's just, you can see these kind of fractals or time-based parabolic runs up, and then subsequent corrections, and then we go on. So even if you do subscribe to Dave's view that we get a correction to the end of the year, that's 3 months away. Could be worse. And look, it's not to say that Dave is right. We could, this correction could play out for September, and we could have a bullish Q4. Just last week, here I was talking about a possible bullish Q4. So I think, short term, no one really knows. So yeah, you just got to place your bets one way or the other. One person who, of course, is still banking on a bullish Q4 is Plan B. So he tweeted 2 days ago that he thinks we're still on that path. So yeah, I'm not sure. If you're a stock to flow guy, you might be sweating it just a little bit at the moment. But anything can happen. It's just, as we keep saying, this kind of narrative battle between stock to flow and the diminishing returns and the price correction. It's going to be fascinating to see where we are by December. Can we reach 100K by December? I think for stock to flow to stay intact, we need to hit 100K by the end of the year, if not soon after. Now, the other big thing that's going on at the moment, of course, is Gary Gensler, the head of the SEC in the US. Gary's been, you will have noticed, increasingly noisy about his views in terms of just a lot of cryptocurrencies being securities. There's thousands of altcoins, cryptocurrencies, crypto assets, whatever you want to call them. Vast majority increasingly looking like the US will want to view them as securities and enforce them as such. So Washington Post posted a big interview with Gary earlier today. So you can see, you can watch the videos at the Washington Post, and they've also published a full transcript So yeah, I've read through it. I really recommend that you do read through it. I mean, not too much in terms of new information, but I think Gary he explains again that his view and the SEC's view is very much that, for these decentralized network tokens to exist going forward, they need to come under a much firmer regulatory framework. And he's really putting the call out for all the different crypto projects, particularly any that are based in the US or looking to do business in the US. He wants them to come and knock on the SEC's door and talk to them. I mean, I don't know how if they have the resources to facilitate that, but he would like that to happen. So as I say, do recommend that you read the transcript. I guess one thing that's worth stating is that he does point out that he views Bitcoin as a decentralized digital scarce store of value, a speculative scarce digital store of value. So the distinction there is, I think it's safe to say that Bitcoin is not viewed as a security. So in one respect, one way of viewing all this is that this is potentially bullish for Bitcoin, slightly bearish for altcoins, maybe increasingly bearish for altcoins, depending on what happens. And I suppose it's just interesting because we're back to this sort of narrative battle, if you like, between Bitcoin maximalism and tokenize the world. So on the one hand, you've got Bitcoin as Bitcoin not crypto, and in the other scenario, you've got hundreds or thousands of different chains with thousands, if not many more thousands of different tokens for all sorts of different use cases. It's just that the tension between those two visions is, it's just fascinating, really. Wall Street Journal, who probably not what you call crypto friendly, I like this headline: Gensler doesn't see cryptocurrencies lasting long. I think that's a slight use of hyperbole there from the Wall Street Journal. But they're right in that one of the things Gensler basically says, the history of finance or the history of banking in the US. So there's just a limited viability for too many different competing private forms of money, is what he's saying. And I think he's talking about cryptocurrencies, but he's talking about stable coins as well. So, anything that's not Bitcoin and potentially Ethereum could be okay, but DeFi platforms in particular, lending platforms in particular, and stable coins in particular are all going to come, I think it's clear to say, under increasing regulatory threat from the SEC. It just reminds me, actually, I saw a tweet yesterday, don't quote me, I didn't verify this, but saw someone saying that someone was served, I think at the mainnet crypto conference in the US. One of the speakers was served with SEC papers just as they were walking to the stage, that's mafia tactics if that was true. Anyway, let's keep moving. If you take a cynical view, and when it comes to American politics, unfortunately, the only realistic view sometimes is the cynical view. I don't know who this guy Jim is, but he just points out that Gensler taught a blockchain class at MIT. When he was nominated, crypto universe was excited, as we saw Gary as a guy that understands blockchain, because he does, right? But now Gary is perhaps saying that the entire space is a giant scam and his agency must protect investors from themselves. I think it's a very cynical view of Gary. But so what's really going on here? Well, Gensler is a career bureaucrat, writes Jim. Nothing more, nothing less. That means he gets important positions of power and he gets to be in the room when policy is formulated and offer his opinion, and it will therefore be considered. However, when the policy is actually made, Janet Yellen gets to decide, and Gensler is there to prostitute to the full force of his office reputation to sell whatever that policy is. Otherwise, he's out the door, back he goes, and that is how Washington works. As I say, that's a cynical view, but yeah, I think there's probably something to that as well. Speaking of cynical views of the SEC, you remember Elon Musk has had his own run-ins with the SEC. So I think this is back in 2008. He famously, who's that? Barbara Walters, famously said to Barbara Walters that he does not respect the SEC. All right, so we've had the cynical view, right? Now, let's have a look at the other side. Let's have a more positive view of what's happening here. And to do that, we'll go to our man, Raoul Pal, who says, listening to Gensler, it's clear that he is laying down the hardest case he can for the regulation of digital assets. But my view is that he will likely get his way, and most are going to be classified as securities. However, there'll be a wholesale change to what that means. I thought this is quite an interesting perspective, and this, I think there could be something to this view as well. So Raoul says, it's like when the internet started to gain traction, the authorities tried to impose harsh rules, but in the end, there had to be a grand compromise not to stifle something very important. That decision led to trillions of dollars of new capital creation and the largest investment inflows into the US in history. And the innovation that was seeded from this light touch regulation, of course, changed the world, and the US was the leader. So in Raoul's view, digital assets are just as big a deal. This technology has created a new financial system. It's more robust, and it's creating new business models on an extremely large scale at an extremely fast pace of change. So digital assets might be securities. So it's just about, the regulation being applied with a lighter touch, right? And then potentially everyone can be happy, because the reason no one wants to call something a security at the moment is it just comes with a huge burden and cost, time, access to regular investors, all that stuff. So, Raoul's saying accredited investors, that stuff's got to go. Blah, blah, blah. I shouldn't say blah, 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 but I won't go on and read the whole thread. But I think what he's saying is it's up to the US to recognize that this is a clear technological innovation, and you either embrace change and find a way to work with technology innovators, or you let that innovation and capital creation go outside of the US. So that's the choice that the US has to make. Not sure I'd give some of the US politicians, can we give them the benefit of the doubt that they will come to see things in the same way? I'm not sure. Another way of looking at all this, of course, is, so our friend Jack, well-known Bitcoin maximalist, has just retweeted a report, or a Think Boy piece even, is one way you could describe it, by Alan Farrington, who Alan is probably, let's call him a Bitcoin maximalist. It's an easy way to characterize his position. I think very smart guy, most well known for his ruthless takedown of Talib Nassim. It's another rabbit hole. Look that up if you don't know what I'm talking about. But yeah, so Alan's report here, Only the Strong Survive. This is it. Not going to go through it. It's long. It's dense, but it's easy to read as well. It's concise in a way. Essentially, what Alan is saying, it's the Bitcoin maximalist view, right? Which is Bitcoin is the innovation, but crypto, everything that is stemmed from a Bitcoin, is a little bit flimsier for a few different reasons. It's less decentralized. It's at greater risk of regulatory capture, and kind of the house of cards, financial speculation games that things like DeFi on Ethereum. It's just, is there an existential financial risk there? So the argument being that, give Bitcoin enough time and Bitcoin can be built out to effectively fulfill all of the same needs, whether that's, DeFi on Bitcoin. Everything can be built on Bitcoin, just takes a little bit longer because, Bitcoin is slow and steady, move slow and don't break things. So it's just another view. And again, just fascinating to see how these competing narratives continue to play out. Of course, if you were going to be, not a Bitcoin maximalist, this is what a Bitcoiner would look like. This is a good meme. I like it. It's kind of uncomfortably close to home. Yeah. Meme of the week, let's call it. All right, let's finish this off. Just going to finish off with Matthew Ball, Metaverse commentator. He wrote another good piece a week or two ago about, I think it was Vogue. He didn't write it. He was featured on Vogue. So Vogue spoke to him about fashion in the metaverse. And at the time, Matthew said that you could argue that Fortnite is already one of the largest apparel companies in the world, 3 to 5 billion a year in this, in the sale of purely cosmetic virtual outfits. And that's more than the likes of Prada, Fenty, D&G already, which is quite incredible. And then, so just yesterday, you may have seen this, Balenciaga, which is, fairly high-end, cool, it's kind of cool street, high-end luxury fashion brand. They've done a collab with Fortnite to do Balenciaga Fortnite skins. And I think there's some real life merch as well. Yeah, there you go. So yeah, just thought that was cool. Metaverse is coming, ready or not, no matter what happens to, with Gary Gensler. But anyway, I think that's it for this week. So we'll see you again roughly the same time next week. What's going to happen? Is the Bitcoin and crypto crash over, or does it play out until the end of the year like Dave the Wave thinks? Evergrande in China, is it an existential risk to the global financial system? Don't know. We'll have to wait and see. All right. Hope you enjoyed that. Thanks for listening. This was the Crypto Conversation for BraveNewCoin. See ya.